Good Super Bowl Sunday afternoon, everyone. You know what day it is? It's Super Bowl Sunday. So welcome. Thanks for joining me. If you like what you see on YouTube, please give me a thumbs up. I'd appreciate that. Today, I keep saying it will be a quick video. As you know, I'm not known for brevity, and my quick videos end up going on for a while. So I'm mostly going to talk about the market today. And I decided to do a video because, frankly, most of the questions this week were all about Russia and the possible invasion of Ukraine. So I'm going to get to that in a second. Let me just cover a few brief housekeeping items that are kind of forefront of my thinking right now. So one, if you're looking for 1099s and tax documents, I woke up pleasantly surprised yesterday to see that they are online and uploaded. So you can go onto your account and download them if you like. They told me they were going to be in the mail by the 25th, but now I certainly think they'll be in the mail this week. So that's good. We're a little bit ahead of schedule. Yay for fidelity. So that's tax documents. If you have any questions on them, just contact Renee in the office and she'll certainly help you out. Today is the last day to sign up for our spirits tasting with the good folks at Litchfield Distillery in Connecticut. I sent a couple of emails around, so if you are going to attend, please sign up today. We're going to start getting the orders done tomorrow and get those delivered quickly. And what else? Did I leave anything else out? Oh, a couple people, more than a couple, keep asking about how the puppy is doing. So I said, you know what, might as well just put up a picture. I have to find it. I'll show you two pictures. And the puppy is a year old and certainly big. And as you can imagine, the Bernese Mountain Dogs like to climb. So ours is always climbing on the bed, on the couch, anywhere where she can climb, she does climb. So there's an update on that. And with that, let me talk about the markets, Russia, etc., and offer. Let me pull up another. I'm going to pull up my screen. There we go on that. So I can use my screen as well. So let me offer some comments. Number one, a lot of people asked what's going to happen if and when Russia invades Ukraine. Let me preface it by saying, with any kind of military conflict around the world, a lot depends on what position the market's in going into it. Is the market going up, up, up? Is the foundation super strong? Are we in a strong bull market, or are we going down, down, down? Foundation weak, strong bear market. So a lot depends on what kind of market you're in. Well, we already know stocks peaked for second trading day of January. And we went down for 3 weeks into that pretty wild day on January 24th. Okay. And it wasn't because of Ukraine. It wasn't because of COVID. As you know, every time someone blamed the decline on COVID, really since the middle of 2020, I've laughed. I'm like, it's not COVID, because the market looks way past COVID beginning in 2020. Media can say whatever they want. They can, because they always feel the need to assign credit and blame. I can tell you, the markets have not been worried about COVID for a long, long time. This decline, and as I've said this for now since December, when I first said we were going to have a Q1 decline, I said the declines are going to be about the Fed. The Fed, Jay Powell, the Fed, Jay Powell, the Fed, Jay Powell. The decline has been 90% plus about the Fed. And we came into the year in my forecast, which I've published it ad nauseum, so no one should be surprised. No one can say I didn't say it. I've said, look, the markets are continuing to price in more and more Fed rate hikes this year. I'm taking the under, meaning I think the Fed is going to blink, just like they did in 2018 when the market was pricing in a whole lot more Fed action. And I feel real strongly about this. And I've said since the end of October, inflation is going to peak by March 31st. This is an arbitrary date. I still think the Inflation numbers are in the process of peaking right now. So I think they're going to peak by March 31st. And I think the Fed is going to start raising rates in March. So think about this. I think inflation peaks. I think the economy is peaking. The growth is peaking. And I think earnings growth is peaking. So what's the Fed going to do? The Fed is going to raise rates into a declining inflation environment where growth is starting to trend down. Exactly the opposite of what you do not do. I've been super critical since the summer of 2020. That's when the Fed should have started to slowly taper their bond purchases. I called it a gentle glide path. And instead, they're now trying to play, they kept saying, oh, inflation's transitory, don't worry about it, it'll be here and it'll be gone. And then the Biden administration followed suit, inflation transitory, it's here today, gone tomorrow. No, it's not. But the Fed should have done their work in 2020. Slowly taper bond purchases, then they can slowly raise interest rates and they can slowly sell some bonds in the market. What are they doing now? In a hurry, they sped up their tapering of bond purchases, which we have seen the last couple of months. And now they're going to raise rates. I think, early on, they're going to raise rates too quickly. It could be every meeting for the next 2 or 3 meetings. It's the wrong thing to do. Why? Because the Fed is almost, I didn't say always, almost always wrong. They are always reactive. They're never proactive. They follow what the market tells them to do. And that's where we are right now. So I know I went off course about the real topic, which was the possible invasion of Ukraine by Russia. So let me, Putin, for all of you guys who have kind of trashed Putin over the years, he's a brilliant politician. I'm not saying he's a brilliant man. I'm saying he's a brilliant politician, and he knows which buttons to press depending upon who sits in the White House and how to press them. So right now, all he's done is he's continually amassed more and more troops at the Russian-Ukraine border. He hasn't said anything really, except that I think he said something like the West should worry about itself and their oppression, whatever. Doesn't really matter, but he's certainly pushing the buttons of the West. At the same time where we know that Germany made a deal with Russia to get natural gas and the Nord 2 pipeline. Topic for another day. I don't want to start going down that rabbit hole just yet. So right now, what happens, we see Russia has amassed troops. What happens if and when they do invade? And I don't really have a strong opinion either way, although I did read over the weekend from Martin Armstrong. He supposedly is in the know. I don't know what's fact or fiction, but he read, or he opined, or he stated with fact that Russia has sold all of its treasury holdings. Now, all the saber rattling internationally, usually actions speak louder than words. So I do find it interesting that if it's true, Russia sold all their treasury holdings, and that likely is in response to what they think will be sanctions. If they invade. So there is something to that. If it's true and they sold their treasury holdings, that would make an invasion more likely than if they just massed troops and kept all their treasury holdings. We know China has reduced its treasury holdings, but they still hold an awful amount of treasuries, which makes a real Chinese conflict with the US very unlikely. So hypothetically, if Russia invaded today, tomorrow, next week, next month, whatever it is, like I've said before, I think it's a 1-week story. Markets get rattled for sure. How much they get rattled? Some kind of single-digit decline. Could it be 4 or 8%? Yes, it depends on how much we're already down into whatever action happens. I'm not a military expert. I don't play when on TV, but the experts say there'll be 2 to 3 days of some kind of aerial assault, cyber warfare, and then Russia sends ground troops in. And I'm saying this cavalierly, but I certainly know there will be massive casualties if Russia does do this. So if they go into Ukraine, yes, the markets will respond negatively for a couple days to a week. will be down probably some single digit number, and then the markets will quickly move past it because a Russia invasion of Ukraine is not going to impact US GDP growth. It's not going to impact US earnings growth. It's a superficial macro global story. It's more of an energy story, frankly, than anything else, and it impacts Europe more than the US, but it does have a limited impact. Now, that all assumes that the US doesn't commit ground troops, which I don't think anybody believes is going to happen. If by some chance the US committed massive ground troops, we're talking about a real war, and that's a different story. Again, it's not going to happen. So let's not go down that path yet. So let me pull up a chart, and I wanted to show you on the market some scenarios which I think are possible, probable, likely. Can I pull up my, that's odd. I can't get to my, 1 second. There we go. Okay, so here is a chart of the S&P 500 with Friday's data included. And let me just massage it a little bit for context. There we go. So, as you know, we came into Q1 and I said, we're going to see some kind of single-digit percentage decline in Q1. Well, this decline from high to low is probably around 10, 11%. I didn't think the magnitude of the decline in Q1 would be as high as it's been, but I certainly am not shocked we had a decline in Q1. This day right here, this wild day where we were down over 1,000, then recovered in the Dow, this was the internal or momentum low. I've written about it extensively. It's the point at which the stock market sees the most damage and the most downside momentum. So that's it. This is the momentum low. Pre-2018, we would normally see the market, I'm going to use let's use my arrows. Okay. So the pre-2018 market, you would see this momentum low put in, the market bounce into some point, and then the market put in a secondary low, and the decline is over. We march back on to our merry way back to new highs. We didn't have that Christmas of 2018, and declines since then have not carried that same kind of structure where you have a decline, a rally, and another decline, the secondary decline. And the same thing happened during the COVID crash in March of 2020. We never had that rally and then secondary decline. Doesn't matter. Markets always change. You better evolve. Don't be a stick in the mud and believe that you have to be right and the market's wrong. It doesn't work like that. So where are we now? I guess for me, the question is, one, do I think this first decline is the start of a long and protracted bear market? No, I do not. I think as I said this on every TV program I've been on, I wrote about it. 2022, I said a zillion times, it was not going to be a great year for the equity markets. You needed patience. It was going to be frustrating for both bull and bear, and you better traffic in quality. That's how the year would go. And if I was a kid with crayon and paper, I would say we went down in Q1, up in Q2, down in Q3, up in Q4, plus or minus 5% when the year is over. Again, market didn't have to follow that was my prescribed path before the year started. Am I going to be fully right? Probably not, because the market always throws monkey wrenches in my forecasts. But right now, we had this low on January 24th, and we had a super strong rally, and now we're rolling over the downside. So for me, the question is, are we fully on the way back to new lows in the here and now, meaning in the next 2 to 4 weeks, or will this decline wrap up well short of this low, and then we rally again? I don't know, frankly. We'll watch, we'll see, we'll react, adjust accordingly. But certainly, the market's not in a super great spot. people are used to having me call like after this decline. I'm good about saying like after the COVID crash, I was the first one out and said, we're going back to new highs. I feel super strongly about that. I said that in the end of March on Fox. I said it in Yahoo and I wrote about it. I did not say that down here. What I said after this decline was it's a sell the rally, buy the decline, or as they like to say, cutely say, sell the rip and buy the dip. And that's where that's the mindset I'm in for this year. Sell rallies, buy declines, don't go crazy. It's not going to be a great year. We'll get past this year. Better opportunities are going to be ahead. So I do think at some point, this bottom right here is going to be revisited and kissed and maybe exceeded briefly, or maybe just stop short. Again, we'll take it as it comes. What's interesting is the market's in a much better spot right now to build a bottom if we can go a little lower. Now, if the market just jumps up tomorrow, Monday, at the open, I don't like those markets and I have a tough time chasing those, and I won't, frankly. We want to see some more weakness to build some more pessimism for a better rally. Let's take it day by day. You'll definitely check the blog and see what's going on. But I do think whether it's in the next 2 to 4 weeks, we come back down to this arrow, or maybe they make it much more difficult and sloppy, which Mark can do whatever it wants. Doesn't need to listen to me. I mean, maybe it's we go down, we go up, we go down, we go up here, and then we start a bigger decline much later in the year down here. Again, a couple different scenarios. Unlike last year and the year before, where I just kept calling for all-time highs, I'm not calling for them now. I think we could make an all-time high in the summer as it gets warmer. Sure, that makes sense, but it depends on how we trade the next couple weeks to a month. So that's where we are in the market. Let's see what happens with Russia. People are opining that Putin's going to do something during the Olympics. I don't know. He likes the international stage. I never met the man, frankly, so I don't know how his advisors work and what he's going to do. But he certainly is playing the U.S. and playing the West very deftly. I would say that. So let's see what happens over the next couple of weeks and see what happens with Russia. Maybe it will all go by the wayside and we won't have to have this constant conversation about it. Maybe it won't, but I don't think it's a big macro story that's going to last weeks and months. And what else? Oh, gold is the other thing I want to mention. I've had a number of conversations about gold. I have said in my reviews with clients, in the fourth quarter, we run a gold strategy, 2 of them, but one that we take client money in. And I said, I thought it was a second half of 2022 story. And after how it performed in the fourth quarter, I said, no, I think I'm wrong. I think it's in the here and now. It's Q4 of last year, and it's the first 6 months of 2022. I said it in the forecast. I think gold's going above $2,000 an ounce on the way to $2,500 an ounce. I still feel that way. I think gold is in a good spot. I would buy any decline in gold, and I'm not selling the rallies anymore. I think gold has turned the corner for a pretty decent intermediate term trade, and gold is going much higher. Why? Gold, contrary to textbooks, I'm pointing to my bookcase, contrary to what you think about textbooks and popular opinion, it's not true that gold is a great hedge against inflation. Gold does well before inflation starts, and then gold will do well when earnings growth and GDP growth begin to roll over, which is where I think we are now. So again, I think gold's going well north of $2,000 an ounce, and long-term, it could be $3,000 an ounce and higher. But I do think the trade for gold is here in front of us. I would buy weakness into gold, and we will buy weakness into gold. So that is that for gold. And okay, let me change that screen. And whoops, let's not do that. So let me sum up and say, whoops, sorry guys, I'm having some operator errors. We're in volatile times in the market right now. It's okay. I mean, we survived them and we will survive them again. Not the end of the world. So I'm always happy to answer questions. You can email them, you can call, you can, whatever works best for you. 1099s are uploaded. And I say that I'm so glad it's early. So if you're waiting for tax docs, do your tax early like I do. You certainly can. And oops, don't forget about our spirits tasting coming up. I shall, oh, you know, let me share my favorite picture. So there you can see the puppy, as I affectionately call the boy and his dog, which is funny because Dee doesn't even love the puppy. But I took that picture a couple of Friday nights ago, which is my favorite. He was passed out and she was just hanging out, chilling. So with that, I thank you as always for spending some time with me. This was turned out, I didn't say quick because it's going to be longer than ended up being longer than I thought. Good luck in the Super Bowl. We're all rooting hard for the Bengals and Joe Burrow, but my heart says Bengals, my brain says Rams win by between 7 and 10 points. And with that, thanks again. Please give me a thumbs up on YouTube if you like it. I shall be back on the blog quickly with updates. And if the markets get more volatile, I'll update more often. So that's it. Thanks again for watching. Stay safe, stay healthy. Spring is almost here. Bye-bye.